How do you say your last name, by the way?
Arison.
Arison. Okay, great. Hi, this is Eric Schleien. You are listening to the Intelligent Investing Podcast, and today we have George Arison on. George, welcome to the show.
Thanks for having me. Excited to talk to you.
Yeah, sure. So where are you from?
Well, I was born in Georgia, the country. Moved to the U.S. when I was 14 to go to high school. Spent 4 years in Maine, which obviously is very different from what I had been used to previously.
Yeah, it's a bit.
While going to prep school, and then went to college in Vermont, and then lived on the East Coast for about 10 years in D.C., and then moved to California now almost like 10 and a half years ago. It's actually a really long time since I've been here, even though I still don't really think of California as home in any way.
What feels most like home for you?
I still feel DC is like kind of my formative years from the perspective of like becoming an adult. I'm also really into politics, and so given I work in business, living in DC was always very fun because you could still kind of live politics vicariously. And then, I think given that I kind of grew up in the US in New England, that's also in many respects home as well.
Got it. Cool. So tell us a little bit about what you do and what you started and a little bit of overview about you.
Yeah, so I'm a co-CEO and one of the founders of a company called Shift. We're a marketplace for buying and selling cars, shift.com. You come to our website and you can submit your car information and sell us your car, or you can find the car that you want and then buy it from us by either having that car be bought online and then delivered to your home, or having a test drive delivered to your home prior to purchase. In markets where we have operations, which is most of the markets up and down the East Coast, up and down the West Coast, we are able to bring the car to you prior to purchase, and then you can buy it at that point. We're a growing company. We just went public through a SPAC transaction a few months ago. Closed it on
Congratulations.
October 15th. Thank you. So it's been a whirlwind kind of 2020, as it has been for almost everybody, because running a company and a business in this environment is quite challenging. But then when you added the transaction to it, it's been a crazy 12 months. But we're really excited about where the business is, and really excited about growing and bringing it to more consumers.
Now, were you involved in the company before they went public, or what was the story behind that?
Yeah, I started Shift in 2013, 2014. So I had moved to the West Coast, to California in 2010 to join Google, in large part because I needed to have my green card be taken care of. And the previous company I started, called Taxi Magic, now known as Curb, had tried to get me a green card, but the government thought that I owned too much of the company to qualify as a real job, which I realize sounds ridiculous, but it is what it is.
Yeah.
And so I had to go to a bigger company to get my green card done, end up being fortunate enough to join Google and spend some time there. And while at Google, started to think of different ideas that I wanted to pursue. My co-CEO at Shift and co-founder Toby Russell first had the idea that, hey, we should look at the automotive space. And we did, and spent a lot of time investigating it. And eventually I left Google and started Shift, and have spent pretty much every moment of my life other than with my children working on this business.
Well, I want to unpack something. So you said your partner, and his name is what? What's your partner's name?
Toby Russell.
Toby Russell. So Toby says, I think we should get into the automotive space. Where did that insight come from?
Well, what he said was more like we should look at this space and see if there's an opportunity there. So he had joined, we did Taxi Magic together in 2007. And then afterwards, he joined the Obama administration while I went to Google. And then he joined Capital One. And while at Capital One, he learned about kind of automotive lending, because that's a big part of any bank's business, and that banks were completely ignoring the peer-to-peer transaction space. So half the cars sold used in the US are sold between individuals, but it's really difficult to obtain financing for those transactions.
Interesting. Okay.
So you can easily get a loan when you go to a dealer and buy a car from a dealer, right? Like it's kind of part of the course. But if you're buying a car from another person, it's actually very tough to get financing. Really, the only people who will underwrite that loan will be credit unions. And so if you don't have a relationship,
why is that? Why would credit unions do it over
it
there?
has to do with kind of concern around clean title. So the rates on car loans are very low in general, right? Like even with not very good credit score, you'll get a loan for way less than you would if you try to borrow money from a bank just kind of without an asset. And the reason is because it's a very secure asset and it's a very liquid asset, right? Like if you fail to pay your loan, the bank can repossess your car, and it's very easy to resell it. So the likelihood of them losing money is very low. Banks just kind of worry about how titles are managed in a private party transaction. Is there going to be a clean title? That's number one. And number two, there's a risk of fraud between individuals, right? Like the dealer is on the hook to make sure that the person getting the loan is actually the person they claim to be. So like checking your, credit score, checking your license, checking your employment history, that kind of stuff. Whereas in a private party transaction, the bank would be on the hook to do that, and they're just kind of worried about that. Credit unions feel more comfortable with it because they have an existing relationship with a consumer usually, and so they kind of know who that consumer is. And so our initial thought was like, is there an opportunity in creating a financing product for this like non-dealer transaction? We, both of us at the same time, had bought a car kind of recently around when we first thought about this. Toby had gone to CarMax to buy a car. He called up Capital One and said, hey, I want to get a loan to buy this car from CarMax. And like, we can't do that. You have to go to one of our dealers to get a car loan, which he found to be super kind of, interesting that they would not finance even for an employee a car purchase when he was just trying to be a really good, employee and make sure that he got a loan from his employee. And then I had a car that I had leased and needed to get it financed to buy it out, like when the lease was ending. And I couldn't get any bank to work with me when I would go directly to the bank, whether it was like my main bank, whether it was the bank that had my mortgage, another bank that I kind of had a relationship with. All of them told me, go to the dealer and you'll get a loan. And I just kind of found that really, really crazy. Like, why am I going to a dealer in a car that I already have to get a loan to do the buyout? And so those experiences plus kind of this insight around, hey, this private party market is completely ignored by the dealer is what got us interested in the idea of automotive. And initially, the focus was much more on like the financing side of it. Can you build a financing product? So then I spent the next kind of year, most of 2014, really, frankly, or first half of 2014, talking to a lot of banks about this, like, can we do something that will kind of address your concerns? And all the banks really pushed us in the direction of like, we really need you to own the transaction. We don't want you to we will not work with you to give you financing for a transaction that you don't control. And so initially we never thought of like being in the transaction business of like having cars to sell. Right. But if we wanted to build a financing product that we had kind of envisioned, we needed to be in the transaction business. And so that's how Shift in its current incarnation developed. The other piece here that was surprising in many respects for me was or not planned was the operational kind of component. You realize that you can't really sell cars effectively unless you recondition those cars prior to sale. And today we run reconditioning facilities in every market that we operate in, moving cars through reconditioning before they're sold. We have actually two different tiers of reconditioning, what we call value and then certified. And that actually helps a lot. And we're able to sell a much broader spectrum of cars by having that. But again, like, if you had asked me in 2014, like you're going to have, dozens and dozens of mechanics to be working for Shift, I would have been like, no way, right? That was not what I envisioned at all, but here we are now.
Interesting. So then what was the progression of, having this idea, kind of figuring out what you needed to do? How long did it take before you actually were up and running?
So I started working on Shift kind of full time in, I think, July or August of 2013. And then we incorporated the business in mid-December of 2013 and raised our seed capital, and then sold our first car. What car that we track like in our system was in June of 2014. I had sold some cars on my own before that just to kind of see what the experience was like. And this is in the early days, we didn't have a parking lot. We were working out of my house. Cars were parked literally on the street in front of my house. And so it was like not a real operation, but we're just kind of learning how to, how to do the transaction. Or like I sold a car to another person in order to learn what that was like. I bought a car from another person to learn. That was like, so we did like a dozen transactions like that, but I don't really count those as like official Shift transactions. Yeah. We sold our first Shift car in June of 2014. So basically 6.5 years ago.
So how does that work when it's like, okay, we have our first car we're going to sell? Like, how did they find your website? Like, how does that work?
So we We were really lucky because, well, I'm not publicly allowed to talk about it, but there was a kind of
Then don't talk about anything you can't
and
publicly.
no,
Yeah.
no, we had this like kind of really unique access to a bunch of inventory that we developed in 2014, and bunch being like 20, 30 cars. So like we kind of collected a bunch of these cars in May of 2014 and had them, parked at a garage in San Francisco. And now we need to like get ready to sell them. And so we basically took really nice photos of the cars and listed them on AutoTrader, Cars.com, and CarGurus. And that was kind of the primary ways to get the consumer to know about us, right? We also were listing cars on Craigslist as well. And then consumers would kind of reach out to us and, their expectation was like, okay, so I probably like, have to meet you somewhere. And we're like, no, we'll actually bring the car to your house, right? Which was like a big kind of wow moment for the consumer from Shift, because that's not something that anyone really expected. And now when we say it, obviously people are not as surprised because we like have been doing it for a while, but in 2014, no one thought of that. And then would, help the consumer kind of close the transaction, right? So like our initial probably 100 cars that we sold, people thought we were like just another person selling the car. And then like, we would manage the entire transaction. And so it kind of surprised them that actually, we would do that.
Right.
We had a website, and you could book a test drive on our website, but it was like super simple, right? Like, you would put in your information in terms of where you want the test drive brought to, and that would send an email to us to take the car to you. And so I remember we were like sitting in our very first office, which was like a floor in a townhouse in the Castro. And the first time the email came, like everyone was kind of like jumping up and down.
Yeah.
We have a real customer, so it was fun. But the weird thing about this industry and the space is that the dollars add up really quickly, right? Like you're dealing with items that are very expensive, and so early days of a business, like, oh, I made 10,000 in revenue or 20,000 in revenue is like a really big deal. But like,
Right.
I think we literally made 20,000 in revenue the first car we sold, right? Because it was like worth $20,000. And so
Right. Yeah.
you kind of move on revenue really, really quickly, and it adds up really fast.
Now where are you making money from? What's the model around that?
So in the automotive kind of transaction business, there's really two core components to revenue. There's the metal itself. So like I bought a car for 20,000, I sold it to you for 22,000. That's kind of shift commission on the car. Now we subtract the reconditioning cost from that and get to the what's called front end gross profit. So that's the money you make on the car itself. And then there's what's called back end gross profit, which is the money that you make on helping people get financing, buy a warranty, buy other insurance products. And that's like in a normal dealership, that's by far the majority of the profit that a dealer makes. And that's true for us as well. It's like half of our gross profit comes from the F&I. The reason being that the metal itself is mostly a commodity, not always, but mostly a commodity, and so the margin on the metal is not very high. And our whole concept is to give sellers more money than you would get in a trade-in, and so our margin is even thinner than an average dealer because we give the seller more money, and then we have to make up for that on the F&I side, as well as in having lower cost structure, right? Because the full thesis of our business is you use technology as leverage opportunity for the business, so you can have a lower cost base than a normal car operation.
Got it. Now, are you guys still growing pretty rapidly, or what does growth look like right now at your business?
We are. We grew, super fast in Q3. That's probably as much as I'm allowed to talk about, since we've not yet released our Q4 earnings. But our projection for 2020 second half of the year, so like H2 of 2020, was about 70% growth, which we were really excited about. That's kind of public, and so I'm allowed to say that.
Yeah.
But yeah, I mean, the business, look, used car sales online are less than 1% of total used car sales. So it's like a massively small penetration in terms of digital transactions. The lowest kind of vertical in retail after cars is groceries, which in 2019 was at 9%. Now, I think in practice, groceries are way higher than 9% today, given COVID, and cars will be higher than 1% given COVID as well, but it still will be a very small kind of single digit number. And so the opportunity for growth is massive. Most other parts of retail, are in the kind of 30 to 40% digital penetration today, whether it's, books or, clothes, etc. So that's the goal, right? Like you want to get to a place where you're at least a third, if not half of the market is digital. And I think cars are, one area that hasn't really been disrupted in that way. And there's a huge opportunity to kind of move them in that direction. So it's kind of exciting that, COVID, as horrible as COVID's been for the world, for digital transformation, it's been a really powerful kind of opportunity, and so it's really exciting to be seeing our business, demand being as strong as it is, and consumers wanting to experience our way of buying or selling versus the alternative. Because we almost like created this for getting it done in a way that's completely touchless, even though we had no vision of COVID when we created.
Yeah. No, who would you say your biggest competitors?
So there are two other companies that are in the digital automotive vertical. I don't really view them as competitors, frankly. They're more like our peers because, again, the market is so big. We are in no way like competing with them for consumers, and they're not competing with us, right? All of us are kind of competing with a traditional dealer for consumers, or for customers. But one company is called Carvana. They've been public for a few years now and are doing very well and have really scaled really rapidly. And the other company is called Vroom. They're different from us in both the user experience perspective and somewhat in the inventory that they sell.
So for Carvana or Vroom?
Both Vroom and Carvana. So both of them, kind of their main product as far as user experience is concerned, you go to the website, find the car that you want, and then you buy the car sight unseen. And then you will have the car be delivered to you. We allow you to do that, like Shift does that as well, and a reasonable portion of our users will take that option. But we also have the option, and our primary option is that you book a test drive, and the test drive is delivered to your house. Prior to buying, and then about half the buyers will buy the car at that point. So that's one kind of big difference. Our business is more local as a result versus national, versus their business is much more national. But we don't have this kind of huge shipping cost to shipping cars far away.
So are you only dealing with certain geographical locations then?
We will ship a car anywhere. So like if you want, I don't know where you are, but like if you're in New
I'm
York,
in Philadelphia.
So if you're in Philadelphia, you come to Shift. You buy a car from us, we can ship the car to you, like Carvana and Vroom can. We won't be able to deliver the test drive to you in Philadelphia. But if you want to have a test drive, you'll have to do it in the markets where we operate, which is like Seattle, Portland, Sacramento, San Francisco, LA, Orange County, San Diego. And we just started to buy cars in Austin and Dallas recently as well, with the assumption that obviously we'll kind of, expanding to new markets over time. And so the shipping is available nationwide. The local delivery is in the more local specific markets, but kind of where we have operations. And then the other kind of big difference between us and our peers is around the inventory that we sell. So because we offer a test drive, we're able to sell older inventory. It's really tough to sell older cars if you don't offer a test drive. And so we kind of facilitate that. In a way that's unique. So we have cars that are like 9 years old, 10 years old. Those cars are actually a huge part of the used car market. Like most cars sold used are actually older, and at independent dealers, like the mom and pop dealership kind of in a local town, that's actually majority of what's sold. But there isn't really a kind of nice, clean, modern, technology-driven way to buy that car anywhere but Shift. And so that's something that's very differentiated for us.
Now, how do you look at like internal rate of returns? Like, when you're growing, you're obviously not going to just spend unlimited money for growth. So is there some kind of target return you're looking at for your return on capital when you're growing the business?
We don't really think about it that way. I mean, we think that right now it's a kind of land grab situation, right? Like it's just kind of on the, again, like 1% online penetration a year ago, last year in 2019. So kind of almost unlimited amount of growth opportunity. So for us, we have a model that's kind of out there, because when you do a SPAC, we put a model out there. And so our model says basically double in 2021 and then we gave a range to basically double again in 2022. And so our focus is on like growing top line in a pretty aggressive way,
Hmm.
concurrently with improving margin, right? So we have a kind of midterm target of $2,500 in gross profit per unit sold, and kind of
And
getting
that
to that range.
you said that's a midterm target or long
Yeah,
term?
that's a target for kind of Q4 of 2022.
Okay.
We think you can be much higher than that over time, but in terms of the things we're doing today and we'll be doing over the next 4, 6 quarters, we think they're going to position us to be at $2,500 by the end of 2022.
Do you guys think about like what the business looks like at scale, where what those margins would look
Yeah, of
like?
course. I mean, look, like in my kind of ideal world, like kind of 5 years down the road or whatnot, we want to be selling 1 million cars a year, right? Or something
Hmm.
of that nature. I don't know if that's in 5 years or 7 years. Like we don't have a model that far looking for
Yeah.
external perception, but like I think kind of the realistic number I think about today is 1 million cars a year. By the way, it sounds like a ton of cars, right? And you're like a massive company at that point, but
Not
it's
really. I
only
mean, it's a big market, right?
right. That's the thing. There's over 45 million used cars sold last year. So like 1 million is actually a very small percentage of the 45 million. And so the way we think about our business is kind of we can do the localized approach like we've done on the West Coast markets in about
Hmm.
40 to 60 markets around the country. And that will get us to about 70% coverage over the US population with the test drive available to be brought to the consumer. And then from there, everybody else will be getting the car delivered to them through a shipment, but not necessarily a test drive. That's kind of how we think about covering the entirety of the country. We are not on a, hey, let's go to every market possible right away. We don't think that's necessary or advantageous. And so our model is a little bit more kind of careful in launching markets. The piece that's dramatically missing for Shift today is brand building.
Hmm.
So we've now started to build brand. Recently, like just kind of rebranded the business and have developed television ads and will be on more aggressive brand push in 2021 in ways that we've never done before.
Yeah.
And so we think that's going to really help scale the business as well. And then the
And
kind
just
of
remind me,
other,
you said, so let's say you were selling 1 million cars 5 years from now, hypothetically, obviously you're not making any
yeah.
promises. What kind of margins are you guys looking at for selling 1 million cars 5 years out from now?
Well, again, like our midterm margin target that we've talked about is $2,500.
Okay,
We believe the business can be profitable at that GPU number.
got it.
There is opportunity to be higher than that as well, right? So the way, again, we talked about GPU, right? There's a front
Oh, you're breaking up.
end and there's
Yeah.
back end
Yeah.
GPU and back end is so there's two GPUs, front end and back end. Front end GPU is the metal itself. Back end is financing and warranty. So our goal is to be at like $1,300 in financing and warranty through the model we have today, where we partner with banks and warranty companies to
Hmm.
issue those products. But you can actually bring some of those in house over time.
Oh,
So
interesting.
CarMax runs like a big captive financing business where 40% of the cars that CarMax sells are sold through a CarMax auto finance loan. And whereas when you forward a loan to a dealer, you make like $300 to $500 kind of on that loan. When you
Hmm.
issue the loan yourself, you make $1,500 on that
All
loan.
right.
In terms of gross profit. And so, that's one way to drive the gross profit much higher than $2,500 is by kind of having captive financing. Same thing, you can do a captive warranty as well. That improvement is not as massive. It's only like $300-400 improvement, but again, still, significant in the grand scheme of what we're talking about. So it's another area. And then thirdly, like today we don't sell service at all. So if you go to a dealership and you buy a car, you could easily be sold a service product where like all changes will be prepaid for and things like that. Those are actually very profitable things for dealers to sell. We don't sell those at all, but over time we'll add those to us as well. So on the back end side, kind of our midterm goal of $1,300 is very much a midterm goal. We think there's at least $1,000 or more of upside for what we want to do on the back end over the longer term.
So if I'm a car dealer, right? If I'm running a dealership, I should be scared shitless of companies like you. Or no? Is that
Look,
not the right way?
no, I don't think so. So there's kind of two-part answer to that. First, again, I think we've seen how traditional brick and mortar store businesses have both collapsed out of kind of competition from digital, but
Hmm.
also have done really well, right? Like Circuit City is no longer around, but Best Buy actually is doing great.
Doing great. Yeah. Yeah. That's a
Yeah.
good point.
And so we've had a ton of, smaller retailers collapse, but Target and Walmart are doing great. And so I think what you'll see is, some pressure on the traditional dealers that don't innovate and don't move online. But those that do move online actually will do really well. Because I don't think it's going to be like 100% of the market is going to move digital. It's
Yeah.
going to be, a third to half. And then the rest will be consolidated in digital players that innovate and figure out how to survive in this kind of new world.
Is there
And
is
what
there
you
room for some of those dealers to partner with companies like you?
Yeah, so then that's the second part of my answer, which is that
Okay.
like, I kind of am a huge Amazon shopper, probably like you are, and like most
Yeah.
people we know. And when you buy from Amazon, half the time you're buying products that are not sold by Amazon. They're fulfilled by Amazon.
Right.
Amazon does the charging and Amazon does the shipping, but the item's not owned by Amazon in any way. It's a third-party item. And I think the same thing can work very well with Shift for smaller dealers. And so like what I really am excited about is an opportunity to kind of have the dealers list with Shift. And then for us to be able to take that listing and bring the car to the consumer for a test drive that didn't originate on our lot, but originated on the dealer lot.
So
And that way
okay.
we will be exposing the dealer's inventory to a totally new customer, right? Like today, if you're a dealership in San Jose, you only have customers coming to you who are kind of in the 20-mile radius of your store because people will not travel 30, 40, 50 miles to come to a store because there's another store closer to them that has similar inventory. But if the car is brought to their house, they don't mind how far the car traveled, right? Whether it's 10 miles and 20 or 30 doesn't really matter to them. And so suddenly we can bring a car to a customer in Marin that otherwise will never see a car from San Jose because they won't travel that far, but if the car is brought to them, they will. And so we can bring a completely new incremental customer to a dealership. So what our vision is not that we have every dealer in a given region listing with Shift. It's like select dealers that we want to work with that have really high quality inventory, high quality service. We can actually open up consumers to them that they otherwise are not interacting with. And win, it's a win for consumers, it's a win for us, and it's a win for a dealership. So I think there is that opportunity. We're very excited about that. We've not kind of said, hey, we're definitely going to do this in a given timeline. That's not our goal.
Yeah.
We have a lot to do in the core business, but long term, I think there's a ton of opportunity to kind of head in that direction.
Now, as of now, so someone like me that's in Philadelphia, is there any, what is there any customer value proposition for someone like me using Shift right now? Because I can't do a test
Yeah,
drive
I mean,
with you, right?
you'll have an amazing experience that most people cannot offer you, right? Like Vroom and Carvana might offer you a similar experience, but not exactly the same. And certainly, no dealer will be able to offer you the kind of experience that we have in terms of just kind of the user feel and then what you go through when you're on the site. You can apply for financing digitally on our website instead of having to sit in the back office and fill out a piece of paper and then having the dealer type it in and go through this like rigmarole of
And what about Carvana? You think it would
getting
be a better
one.
experience for me than going through Carvana right now, being in Philly?
No, I think Carvana's and Shift's experiences are roughly on par in terms of
Okay.
what the user goes through. I think what the difference will be is that the kind of cars you can buy from Shift will be different from the ones that Carvana will have.
How so?
About 75% of their inventory will match our inventory, but we will then on top of that have cars that are older. So if you're looking for like a 7 or an 8 or 9-year-old car, Carvana and Vroom won't have those cars. Vroom
Interesting.
definitely won't have those cars, and Carvana will mostly not have those cars.
Now,
And so for
does your customer already know that? Like how would I?
um, I think people. I mean, I think people do. Like,
Yeah.
I think a lot of people think that, oh, when I'm buying a older vehicle, when someone's buying an older vehicle, they might necessarily be subprime, which is a
Hmm.
massive fallacy. Actually, we have very few
Interesting.
we
Okay.
have very few subprime customers, but we have quite a few customers who are like in the middle and lower income brackets. They might be extremely credit worthy, but they don't make that much money, right? And so for them, it's unaffordable to buy a $20,000 car, but it's more affordable to buy a $10 or a $12,000 car. And so you have a lot of customers who love the digital experience, but they just can't afford to buy a very expensive vehicle, and so we are there for them. We also have luxury vehicles, and I mean, you can imagine like the white glove service of like somebody shows up at your house for a test drive. That's awesome for a $40,000 or $50,000 Tesla.
Yeah.
But we want to have that experience be also available for someone who's buying a $10,000 car. And so for me, and that's really important for me because I think, the awesomeness of technology that it really democratizes kind of high-end product availability for everyone. And I think that's something that I really feel very passionate about, personally, to kind of open up the more luxury experience for everybody else.
Interesting. Yeah. So now there's this massive land grab, right, going on, lots of growth going on. How do you fund the growth right now?
So we're really fortunate that after our SPAC merger and going public in October, we are extremely well capitalized and we have a ton of cash in the bank, and we're being very judicious in terms of using it. Historically speaking, Shift's always been kind of capital constrained compared to our peers for a variety of reasons. And the way we went about funding this business probably was not the most kind of the way you would have done it had I known all the things about the finance world that I know now.
Yeah.
But again, in 2013, 2014, I did not know that. We should have probably raised more private equity money in 2014 and 2015 rather than venture capital style money, for what it's worth, given the kind of business we are. But today we are really well capitalized and in a really strong place. And, for once in 7 years, I'm not thinking about when we need money next and not focused on that, which is really good.
All right, awesome. Any other things that you think we didn't cover that you think just are worth talking about or interesting to talk about?
I mean, recently, a lot of people have been talking to me about SPACs, right? Because I was one of the first CEOs to do a SPAC this year, and probably the first Silicon Valley CEO to do a SPAC. So people have been kind of asking a lot of questions around that and like why I think it's a good thing or not, et cetera. And my perception on that is that SPACs have really opened up capital markets for a big slew of companies that still have a lot of value creation opportunity going, right? Like when an Airbnb goes public, like it's already created most of the value that it can create as a business. That was not the case before, meaning 15, 20 years ago, companies would go public much earlier than they are going now. Salesforce went public was worth like $500 million, and now it's worth like 200, right? So most of its value creation has happened as a public company, not as a private company, but that's not the case when you go public and are worth immediately 50 or 200, $100 billion. And so I think SPACs are really good in that they're enabling companies earlier in the process that still have a lot of value creation to go to come out into the public market and give investors access to that, which is, I think, fantastic. I don't think it was good for my peers and me in the tech world to have these companies all be sticking to be private for a really long time. It was artificially done and not great. So this is really, really, really awesome. And so I think, that's been a really interesting development, and it'll be interesting to see kind of how that grows in 2021.
I mean, SPACs have gotten really popular, especially this past year. I'm afraid, though, that almost due to this, I mean, it's like now SPACs almost have become a thing, right? Where it's like, I think in one hand, SPACs are really great for reasons like you said, and, helping companies like you go public. But I mean, now it's like half the shit out there is like absolute junk. I mean, I think a lot of SPAC investors might actually get really burned if they're just buying a bunch of things that seem very sexy. And the other thing too is you look at the way some of these SPACs are structured and just massively screw shareholders. I think that's a problem.
I don't know about, I mean, I think it's actually, if you look at SPAC issuances, so there's two pieces, but there's SPAC issuance, like SPAC being issued, and there's a SPAC merger. There's actually not been that many SPAC mergers. There have been a few obviously kind of prominent ones, us, Open Door, a bunch of us happened this year, but that's more like in the kind of two dozen category for 2021. There's been many, like over 100 SPACs.
Yeah, I don't know how they're going to find deals.
Yeah, we're just still looking for deals. And I think, it's been interesting because a lot of them are on the larger side in terms of dollar amount raised, right? Like $400, $500 million. And I think that makes no sense. I think SPACs actually best when they're in the $150 to $200 million kind of size.
Yeah, I'm right there with you on that.
So that's been really interesting. They haven't yet, merged, and they're still looking for targets to merge with. I think that what you want to look for is, but one of the things that happened on is that actually SPACs have become more friendly to investors versus less over time.
Yep.
For example, the warrant amount has gone down, et cetera, right? Like
Well, I
it's been
think Bill,
extremely
are you familiar with Bill Ackman's
yeah.
Pershing? Like, I
Well,
think that's like
that's just massive, right? Like, I mean, it's I don't know who they're gonna merge with.
right.
It's way
But
too
I think in
big.
terms of protecting shareholders, that's a great model that
Yeah.
he put out.
But what I think is, what people should be looking for
Yeah.
when they look at SPACs is quality of the issuer, right? Which is something that I, as a founder and CEO, kind of spent a lot of time thinking about when we were deciding who to merge with, and I think the same would apply to any investor. So you want to I think there's two ways to think about high quality. And
Mm-hmm.
number one is a repeat issuers, right? Like people who have done this many times. And number two is operator issuers. There's a lot of data that suggests that repeat issuer returns are much better, and operator run SPACs have much better returns
It's
as
interesting.
well versus investors, which makes sense because operators know what to look for because they've been in the trenches. Right? Like when
Right.
I do seed investments, not late stage investments, and I have almost no market positions because I don't have time to think about that.
Yeah.
But when I meet with companies, like the reality is I can sniff out BS more easily than I think anyone who is not an operator can, because I can tell what seems to me like, real and what's more like blowing smoke.
Yeah.
And that's partly because I've been there and done that. And like, when people come to me and tell me they have an operational business and then tell me it's not complex, I'm like, guys, like does not exist. Like I've been in operational business now for 7 years, and I don't think there's a thing in operations that's not complicated. You can say it's complex and I'll figure out how to manage it. That's totally reasonable. But if it the thought that it's not complex, will not kind of fly by me. And so I think those are the things I would focus on is like, are the repeat issuers. There is, a half dozen or so really good SPAC issuers out there. And then secondly, kind of looking at, operator issued SPACs that involve people who are either former CEOs or CFOs, et cetera, and or involve people in them who've actually gone through a transaction, right? Like that's another kind of piece of it.
Who are some of either the companies or individuals in the SPAC space that you really admire? And to be clear, you're not giving any kind of investment advice, just people that
Yeah,
you
I'm not giving
respect
any
and
kind of
admire.
investment advice or anything, but
Yeah.
look, like our SPAC sponsors were Betsy and Daniel Cohen. They've done a lot of SPACs. I mean, I think when we were talking to them first, they had de-SPAC 2 companies, but I think since then they've de-SPAC like 4 more.
Okay.
So it's been a lot. Betsy is amazing, right? Like she's been in the kind of trenches as an entrepreneur for like 50 years almost, and has taken almost a dozen companies public over her career, which I think is really amazing. And frankly, like having her with us was awesome, and I also learned a lot from her in the very intense 6 months when we're kind of talking to each other almost every day. So she's awesome. I mean, I think Chamath with Social Capital kind of SPACs has been kind of the innovator in the SPAC space in Silicon Valley, meaning like when I first brought SPAC idea to our board in May of 2020, literally the only person in Silicon Valley who knew anything about SPACs was Chamath. Everybody else was like, "What the hell is this?" And I had to spend like
Interesting.
weeks educating people on, okay, this is how the transaction works. These are the things you need to be aware of. Now, once we did it, and then a couple of us did it, then it became a lot more popular. But like Chamath's really kind of been the innovator in the SPAC space for Silicon Valley as an issuer, and obviously he has a ton of SPACs kind of out there that are outstanding. And then there are other kind of, again, I think looking at SPACs that are repeat kind of is really important, and then I think CEO led SPACs are also really good, right? Like that to me is an important point. Like for example, Nicola De Masi has been doing SPACs almost completely focused on gaming space, which is kind of what he knows really well. So I think he's SPAC 2 companies, and then has another one that's out there looking for a target now. Again, like if you are in that, that's your interest, right? Like you like gaming, etc. Like I know nothing about gaming. I haven't played online games or computer games since I
Yeah.
was like 15. But like if you're into gaming, I think that's an area where I would definitely kind of look at more as well.
Interesting. Well, George, it was really a pleasure connecting and talking to you. And, I wish you the best with your company and, now being public as well.
Thank you very much. Appreciate it.
Yeah. All right. Well, for people who want to learn more about your business, what's Shift's website?
Shift.com is our website, and I'm George Arison at LinkedIn and whatnot.
Okay. And you guys have an investor relations part of your website too?
Yeah, there is investor at Shift, investor.shift.com is for IR.
Okay. All right. Great. Well, George, it was a pleasure to have you on, and take care.
Awesome. Thank you so much.
All right. You got it.